Here's a summary of how the U.S. stock market fared from September 8th through September 12th, 2025, along with what was driving things. The S&P 500, Dow Jones and Nasdaq each pushed to record highs during the week. Large-cap stocks outperformed small-cap stocks. The Russell 2000 small caps lagged. Growth and tech-oriented sectors led returns, while more defensive sectors showed mixed or weaker performance. A major undercurrent was speculation over when the Fed will begin cutting rates. As of late in the week, markets were putting very high odds, approximately 96%, on a small quarter-point rate cut at the Fed's meeting around September 16th through 17th. Soft labor market signals, weaker job growth, downward revisions to previous months, bolstered hopes for easing. Inflation remained a worry. The Consumer Price Index CPI for August rose faster than expected on a month-to-month basis. Core inflation excluding food and energy ticked up. Rising inflation pressured yields and raised questions about how aggressive the Fed will be in cutting rates. Yields on U.S. Treasuries, especially the 10-year note, fell over the week. For example, the 10-year briefly dropped below 4.00% during the week, reflecting expectations of accommodative policy ahead. This drop in yields helped support equities, particularly growth tech sectors, which benefit more when borrowing costs are lower. Investor sentiment showed some signs of being stretched. High valuations and narrow leadership, a few big tech growth names pulling much of the gains, drew attention. There was also buyer fatigue noted. Markets were near highs, but enthusiasm was cautious given macro risks. Inflation and consumer sentiment. Consumer sentiment dropped in early September. Labor market revisions, the U.S. labor debit, revised previous job numbers downward, lessening optimism about labor strength. Small caps underperforming versus large caps. The week of September 8th through 12th was largely positive. Markets made gains and hit records, largely driven by hopes of imminent Fed rate cuts and some easing in yields. But under the surface there were warning signs, inflation staying sticky, labor market weakening and rising bond yields, that investors are watching closely. Don't forget to comment, share, like and subscribe for more insights and updates.